We're one of the few places as a retail trader you can come in and get really probably one of the best news feeds on the planet at a very retail-friendly price point. However, we bought ourselves back from Thomson Reuters because we wanted to more focus on the Metastock technology as opposed to have our programmers working on, their stuff all the time. We wanted to kind of be able to kind of basically go in and make things like the forecaster and user-defined drawn patterns and those type of things into the software. So it's been a good separation. We still have a very close working relationship with Reuters, but we've been able to have literally more resources to develop out our software than probably any time in the 20-year history that I've worked for the company now that we're kind of independently owned again. So that's awesome. We do have Metastock Zenith, and we released that a few years ago. It's pretty awesome. I'm not really going to talk about it today. We also have a very established global brand. We've got resellers in about 200 different countries, or we have about 200 different resellers all over the globe. And we've sold about 310,000 copies of Metastock since we started in the 80s. So we're pretty happy about that. One of the things that we're most proud of is the software that I'm going to show you today has been rated #1 in its price category for this year will be the 24th year in a row. So we're very, very happy with that. It's a very, very functional tool. There's a lot of stuff you can do in it. Our real-time or Metastock RT has won in its price category for 10 years. So let's go ahead and just talk about today's class, and then we're going to get into the software and show you a little bit about it. Today we're really going to focus on one power tool. Metastock, I've literally spent 2 or 3 weeks, actually 2 weeks, training people on the software, tools that are available in the software. And we could talk about kind of a lot of different things, but I try and focus it down to kind of give you kind of an example, in this case, of the tool that's very unique to Metastock, letting you kind of see it in action and let you do it. And so I'm going to kind of show you how our forecaster works. It uses a lot of statistical analysis to identify probable price outcome based on statistical analysis. And it really simplifies the process for you. We just, as part of the new upgrade we just did for it, I'm going to show you how to handle it, and how to even say, okay, well, I'm going to take the last 10 and see what if that's telling me a probable outcome for the future. If it's something you're interested in, it's something that you can set up a free trial for Metastock or Metastock, and I'll show you how to do that as well. There's a lot of stuff that I won't be talking about, but simply, like I said, for time. We have a product, and if you're interested in news or data or real-time data or fundamentals or anything along those lines, you might want to look into like a Zenith product. It's a white label product, a white label version of a product called Thomson Reuters Icon. And Thomson Reuters literally spent about $1 billion actually developing it. And it's very cool. It covers about 95%, I think 95% of the total market. Is about 150 or so exchanges in it, and it's very good. The first copy I sold of that was to a guy up in Toronto at a money show years ago, and he actually called back and thanked me for saving him $1,800 and change a month. He didn't need Bloomberg anymore. So very, very cool product. If you have it in it, there's some videos. You can email me and I can send you some videos that we have on how that works. I also want to be clear that in the Metastock product, I'm going to be very, very myopic in my focus. Going to get really close into talking about the forecaster. So there's some other tools I think are important that you know about in Metastock, and that would be like full market scanning, testing trading ideas with the Metastock platform to kind of get a feel for what works well, and getting expert advice and alerts. Again, it's a very, very full-featured program. I'm going to kind of focus our conversation on the forecaster because it's cutting edge. I mean, it's really very cool set, kind of brand new into the marketplace. We just released last year. Very much appeals to like our options trader because it gives you date and time and that kind of stuff. And very similar in idea to system testing, which I'll kind of cover as we get into the software. So let's go ahead and swap over into Metastock. I promise not a lot of PowerPoint slides. So let's go swap into Metastock and particularly the forecaster. I do want to talk a little about the idea of system testing, so I can kind of explain how it's different than forecasting. If you have a mechanical system, like we want to buy when a MACD goes above 0 or below 0, and you want to sell when something happens, then you have a technical system. And Metastock has probably about more than 30 of these that are built into it. And the idea with a system test is we could go in and we could say, okay, if we bought when this happens and we sold happens, what's that particular outcome in regard to my portfolio? And Metastock System Tester is great for doing that. It'll allow us to do that over a wide basket of stocks. And it'll tell you exactly what your profit and loss looks like and that kind of stuff. What with Forecaster is a little bit different. The idea here is if we have an event, your MACD crosses above 0, or it could be a new 52-week high or a new 50-week low. What we're looking to do with the numbers and the kind of the mapping that we're going to show you is we're looking to see how probable the outcome is after that event. So if we have a 52-week high, for example, what is our likelihood of price change? Is price likely to go up? Is it likely to come down, or is it likely to stay the same? And we try and do that over time. So is it likely to go up after 7 days, or is it likely to stay the same after 7 days, or 40 days, 90 days? And so what we put together is a patent-pending forecast algorithm to not necessarily tell you if 55 is good or bad, but to tell you what the likely price outcome of that particular event is. Is this an event that's going to tell me something in the future? And that kind of event with our technology, we can create all types of events. We could, in fact, let me click here into the Event Recognizer library, and I'll just give you an idea of kind of the events that we're looking at here. You'll notice on the line how you can draw your own patterns in the forecast engine a little bit later. But an event might be the stock goes up 5 days in a row, or down 5 days in a row, or that it hits a 52-week high, or that it had a Bollinger breakdown, or a Bollinger Band breakout up. We have around 30 or 40 different patterns that's in here, and that includes all of your technicals, like the MFI overbought, or the moving averages crossing, or the Santa Claus rally is one that we just added, or a trend surge up or down. So what the software will do when you load in a security is it'll take all of these events, and it's going to look at every time that happened on the chart that you've loaded in, and it's going to give you a statistic break price. And that's what we kind of see. I'm going to go back over here to our event tab, or our chart tab, and I'm going to cough really quick, so let me mute mute out. And what we're, okay. Thank you for letting me cough. I hope I muted properly so you didn't get that in your ear. Now what we've got is one of these events happened on a chart. We'll see a little bit of event marker here. And these are the events down here. I'm just going to go ahead and kind of scooch the price down a little bit. And these are the events that have actually happened on the chart. And I can rank them in a number of ways. Right now I've got it ranked by the most recent event. So I can see that the most recent event was a hand-drawn pattern, which I'm going to show you how to do that in a few minutes. But after that, there was the negative divergence, the stochastic negative divergence. And every time I click on that on a different one, what I'm going to see is different arrows, or different times where that event happened on the chart. You'll notice I'm getting a lot of these custom patterns. I've drawn a lot of them because that's one of the use cases that I use. That has some pretty crazy behavior right now, and there is a way for me to go, and say, based on the last hours, what does the Dow do after it has price behavior that matches like this? So I can go ahead and read these. Again, when I select one here, it's going to put different event markers for when it actually happened on the chart. So I can kind of arrow through that, and I've got it sorted by read. With different sort mechanisms, you can look for things that have the highest profit potential, for example, or have the most accurate current forecast, which I just go ahead and click on that, and then I get my most accurate current forecast right there. So there's different ways that you can kind of look and sort these by. And I think I'll leave it on most accurate current forecast. So the pattern that has the most accurate current forecast is this triple witching event. And now we see kind of the places where that's happened on the chart. If I scroll out on this chart, you'll be able to see there's about 1, 2, 3, 4 event markers. So every time this particular triple happens, that's where we're going to start to look at the statistical analysis that happens underneath the hood. The idea, I don't really kind of want to school you in statistics because, well, I don't know statistics, and it kind of makes the presentation a lot drier and a lot more boring. But to kind of give you an idea of what happens under the under the hood here, when these events happen, what we look at is every time that event happens, and we kind of measure out what happens. So first of all, this event occurs 4 times on this chart within the last 400 days. The first event occurs Friday, March 21st, and the last event occurs Friday, December 19th. So it's kind of looking at where the events happened. This event occurs on average every 91 days. There is insufficient price data to analyze any recent change in the frequency of this event happening. So it's looking at kind of how often it's happening and comparing it to how often it's happened in the past. The things that it's looking at, and it looks at a lot of statistics, a lot of patent pending methodologies, also kind of do other things than just the particular statistics. But 7 days after this event occurs, with a probability of about 95%, the closing period appears to be no higher, with a standard deviation of 92. 14 days after, it's 0.5% lower. 30 days after the event occurs, it appears to be 1.28% lower, and 60 days and 90 days and so on and so on. Again, I don't want to kind of go into all the statistics, but that's kind of just to give you an idea of what it's looking at. It's looking at, okay, every time this event happens, what happens after that? And then we apply the statistical map. And the product that we get as a result of that map is what we call a forecast cloud, which I'm going to go ahead and show you here on the chart. So if I click on the forecast cloud right here, what we see is kind of a bit of we call a forecast cloud. You could call it a heat map. But what we're trying to do is we're trying to statistically map out in a way that's logical what the price is likely to be at over time. So over here we've got a scale that's on your left-hand side right here. And you'll notice that the dark blue areas, or the areas that are outside of the forecast, are not very, they're not very statistically significant. The price is not probable to land in that area. In fact, it matches up with this thermometer kind of reading right here, where it says it's 30%. Of a price likelihood of falling in that particular behavior or that particular zone. Where it gets darker and more lighter and yellow, that's where it kind of goes up in scale. For example, these yellow areas that you see on 95% probability. So very, very likely if we kind of overlay this on the chart, which I'm about to do, it's very likely going to fall in that area at 60 days out. And I think that's why our option traders really like this, is you can come in here and you can kind of see price and time. So if I was looking at a relatively little change, have an option strategy that kind of corresponds or correlates to that. Clicking back onto the chart here, again, with this particular pattern, we had about 4 instances. If I actually kind of highlight one of these instances, what's going to happen is it's going to overlay that cloud. And so what we see is kind of where the event happened, and we see a cloud formation that kind of feeds into and is showing us that. Now this is an event that happened, and we're forecasting out, just to kind of give you an idea here. In this particular one, we're forecasting out 100 days. So in that particular case, we're going out almost 6 months with our statistical forecast. Depending on how, we can change that manually. We can go in and say, well, give me a 90-day forecast or a 30-day forecast. And you can change that manually. but depending on the event, then the default cloud focus, or how far we forecast into the future. So for example, if it's a candlestick pattern, for example, that we're forecasting out, that's going to default to a much shorter time period. And the reason and the logic behind that is a candlestick pattern is a one-day pattern, whereas a triple witching event actually takes several months to form. And so we've put together a matching forecast map or forecast layout based on that. Looking at time, we're going rather quickly. We might have a lot of time to actually kind of look at some different charting examples and some charts. Coming back over to a couple of things that I want to point out here. So here we've got the triple witching event. And again, the patterns, basically, you need about 4 patterns to get a chart. So this just barely qualifies bad. But I can look at, and generally what I will look at doing is different patterns. So I'll take a look at some different forecast clouds to see if some consensus in the market. Here's an inverse V pattern, and we can kind of take a look at this. Once we find something, now I am sorting this by most accurate current forecast. So what that basically says is, show me the ones that have the most accuracy that are currently in a cloud. So if I come back in here, and I kind of highlight on this, again, you'll see that it's very, very much matching up to what the forecast cloud was. Okay. Now, I do have the ability to go in and sort by recency too. So if I come in here and say, well, okay, let's look at the ones with the high. Okay. Or I'm going to go basically say, okay, show us all the ones that had the most recent events. I can go ahead and click on that. And here we've got this again, this 26. This is a pattern I wrote on. I think it was January 6th of 15 is when I drew. I'm going to show you how to do that. But it's happened just now. So you finished its pattern today, actually. And so we could kind of see how that looks, and we could kind of see the cloud going out. So that's in a nutshell what the forecaster is doing, is it's basically looking at a lot of sophisticated mapping. And it's basically trying to tell you what is the probable price of a specific pattern. I'm going to kind of pause for a second now. Like I said, I have one screen, so let's go ahead. There's a few other things that I definitely want to show you as we kind of go through. But I want to kind of see if anybody has questions on this, because it's kind of important. If you have questions, feel free to ask them. Okay, and here's the questions tab. And we do have some good questions. Okay, I'm just going to pop this out. Hopefully that won't hide the view a little bit, but let's go ahead and... Frank Lady asks, what are the shortest patterns available? The shortest pattern forecast that we'll actually forecast out is 30 days. Thanks for the question, Frank. Donna says, can you show a Bollinger Band breakout? Let's go ahead and see if we can find the Bollinger Band breakout to see if I can kind of show that for you. And then, Jeff, I'll get to your question about number crunching. There is a lot of heavy number crunching that's going on, and there's some tricks that we did to actually pull it off in a fairly, it does take a while to load if you start doing a lot of your own events. But let's see if we can find a Bollinger pattern in this recency. Right here. It's not very recent. It was about, it was September 25th on 2014. Unfortunately, it's the only time it's ever happened in the Dow. So in terms of the records I've loaded. So I wouldn't be able to draw a forecast. There's just not enough data. You notice how it has a little explanation here. Let's see if there was an up. Where, again, there's only one breakout on this particular chart in about 4 years based on the definition of it. Jeff asked a question, heavy number crunching here. Yeah, there's a lot of statistics. For each of these patterns and the ones that we draw in, basically it's going and looking at and kind of doing the statistical analysis and the patent pending techniques to kind of draw out these maps. And what we actually did with this last version to kind of make it a lot faster is we actually will, if your GPU qualifies, we'll actually put all of the calculation on the graphics processor, as long as your graphics processor can support it. And by making that change, which was very, very tricky, it actually made it 400% faster. So, but yeah, there's a lot of number crunching that goes in under the hood and for these patterns to kind of get that map out for you. Yeah, it was pretty nice. The RSI calculations, somebody wants to look at the RSI patterns. Let's see if we have them on here. Here's a RSI negative divergence. So here it's happened 1, 2, 3, 4 times, which is just enough to get a forecast cloud. And we'll notice here that you've got, there's kind of what your cloud pattern looks at when you have a negative RSI divergence over. And this one, again, notice the dates on the bottom, 7 days, 14 days, and 30 days. So in this particular one, we have some unprobable areas with the dark blue, but after 30 days, for a reason, there's a very high probability that this Dow is going to drop. And in this case, looking at the scale, that's by about 2% over 30 days. So if you're looking at an option and you just want a directional option put, that might be a good strategy to use with that, or maybe kind of a protected straddle or whatever. Let's go ahead and kind of look at that on the chart. If I draw it right here on the chart, it's basically going to show me how that corresponded to the price activity. And it was actually pretty close. We nailed it right here, kind of came up to it. Sometimes I like to see the divergences from it. I nailed it right here. So unfortunately, the last time that happened was back in December. Actually, that's not too long ago. I can't believe how fast this year's flying with the release. But that will kind of give you the things. I like to look at, to be frank about it, I like to look at stocks that have more patterns, because that just feeds more math into the statistics. I have a comment that you can't show, that I can't be heard, from Don Coyne. Is that the case with everybody, or you guys can still hear me?
You're coming through fine for me.
Okay, then I'm going to go ahead and keep going. I have a question. Somebody wants me to look at Apple. I'm going to do that, but I want to show you a couple more things first on Dow, if that's okay. So a couple of things that we've stat, and I just added like 2 or 3 weeks ago, to the forecaster, was the ability to create your own price patterns. So if I come back into this event recognizer library, and what I'm going to do is I'm going to just basically show you. I had to kind of get rid of the questions for a minute, and I'm going to show you actually kind of put your own patterns together. So right here you've got a draw new pattern. Okay. What I'm going to do is I'm just going to go ahead and click on draw new pattern, and I can draw anything I want to using the pattern editor right here. And this, again, is brand new. It's one of the favorite new tools. I'm going to show you, it's not my favorite new tool, but it's one of my favorite new tools. And it allows us to come in here and say, okay, well, I'm looking for like a gap up or a gap down or a W pattern or a head and shoulders or a double top or a wedge or whatever you want, and look at what the likely price pattern is for that. So in this particular case, I'm just going to kind of keep it relatively simple. I'm going to show you how to draw a gap up. And you'll notice in my list I've got a lot of gap ups and gap downs and that kind of stuff. So I'm just going to name the pattern. I'll just call it the BB gap down. Okay, and I can put in a little bit of a description here if I want to. I'm going to go ahead and leave that alone if I want to. And then I just kind of draw the pattern that I'm looking for. So like, for example, if I wanted to kind of find a head and shoulders top pattern, all I'm going to do is just draw that here on my chart. So let's say this is my head and shoulders pattern right here. And that's literally what you do to kind of create your own pattern. I can also invert the pattern, and now I've got a head and shoulders bottoms instead of a head and shoulders top. I could reverse the pattern, which just makes it backwards. And you'll notice all of these waypoints. Once I've kind of drawn that pattern on the chart, I can kind of say, well, okay, I want the shoulder bit. I can kind of manipulate it just by dragging the waypoints around. Or I can shorten them by deleting waypoints. I can kind of do anything that I want to. I have the ability for shape, so I want it to be right here. Or I can look for the shape and location, which means this would happen somewhere in the middle of my 15 price, right up here. So I'm going to kind of leave it at shape only. I can say, okay, well, I want this to happen over 15 bars or 45 bars or 180 bars. The pattern match sensitivity is how close can it be And there's 3 settings for it. There's low, medium, or high. And with low, basically it's going to look for a lower density. Medium will be a greater density, and high it has to really kind of match it exactly. And then if I can also say I want the decode focus after this to be 30 or 90 or 180 days, just depending on what you want to do. So I'm going to go ahead and get rid of my folders because I'm going to draw a gap pattern here. I'll just go ahead and clear that. And what I'm going to do is I'm going to basically draw my gap. What I want with a gap down is I'd want about 2 or 3 bars at a higher level, and then I want a serious gap down at a lower level. And then what I want to do is I want to be able to forecast based on that price pattern. So here I'll just say, okay, I want 3 days kind of at a support level, and then a gap down below that support, and then I've got my gap down pattern. And again, if I invert that, then I have my gap up pattern. So I'm going to go ahead and make this my gap down pattern. I'll go ahead and save it, and that easily I've got the gap, the BB gap down pattern. You'll see that I do this a lot. This is a very easy pattern to draw for people, so I like to do it. And if I wanted to make a copy of that to make a BB gap up, I could just come back to this pattern. I could say I want to copy the selected pattern, and then I just invert it. I'll move this waypoint over kind of like that because I do want a gap. And what I'm going to say is I want this to be the gap up pattern. Okay, I'll go ahead and save that. It's that simple. There's one thing else I want to show you. Here I can have a pattern quick test. If I click on that, it's going to show me the recent price behavior from the Dow versus back and forth to see if that matches out. I'm going to go ahead and click on save. And gap up in my gap down pattern. Now what I'm going to do is I will just kind of find this on the chart. I'm going to go ahead and, just so that it runs fast, and disable all of my other patterns, and we'll do the BB gap up. And where did my gap down go? We'll just do the AA gap up. You guys get the kind of the idea of how to draw those. And now I'm going to go ahead and rescan the selected analysis. And with that particular event, nothing showed up. The event recognizer library, I wonder if I ran it a little bit incorrectly because there are gaps that happen. Dan asked a question while I rescan this on the selected analysis. I did not get anything on there. That's user error. Let's go ahead and edit the pattern. So I'm just going to go ahead and modify. I'm looking for shape only. I'm going to say 1, 2, 3, 4, 5. It's looking for that to happen over 15 bars. So I want it to happen under 5. So we'll go ahead and rerun that. And we do have some patterns. So right here we had that. You'll notice when I hover over the pattern, it's going to show me the required pattern as well as my drawn. So right here when you see the little pop-up, you see the chart pattern deviation with the required pattern. So I can see exactly when that happens on the chart. And then of course you can draw forecast clouds out from that. If I went ahead and highlighted on this, it doesn't have enough patterns for that particular pattern to happen. Barry, we'll see you right back. One question from Danny was, can forecaster with 2 conditions, can forecaster forecast with 2 conditions, i.e. the MFI being oversold and the stochastics being sold? Not yet, Danny, but we are actually, with everything in Metastock, with the exception of the forecaster, you can actually go in and say whatever. With version 3 of the forecaster, this is version 2. We want to be able to provide you something you can totally customize. Right now we've done a little bit differently where you can draw drawings and kind of define those as patterns that happen. And that's another way that I like to do it. Right now I'm kind of a little bit on the fence about what's happening in Apple. So, not in Apple, we're going to go to Apple in a minute, but in the Dow. I'm a big Dow options trader. And I like to do options on DIA with some of the techniques that are in Metastock. But one of the things I do rather frequently when we've had obviously a pretty good run up, we have a little bit of a pullback here. Sometimes I like to kind of say, okay, well I want to see when that's happened in the past. I want to see when this price behavior has happened in the past I compare the forecast cloud based on when that's happened and what the likely price come in. So one of the new things that we just added is this ability to define a pattern selection right here. So if I just basically click right here, I'm going to basically say, well, I want to see what happens after this type of a price move where we have, 1, 2, 3, 4, 5 days up and then a sideways day. What generally happens after that? And so I select this user-defined pattern, and what I do is I highlight the bars that I want to kind of feed into that pattern. So I'll go ahead and do that. When I'm done, now I could go back further if I want to. I'm going to kind of leave it a little bit small so that I can make sure that I get results back, but I could go back as much in time as I wanted to. I could kind of start here and go forward, and what would happen is I would have a more specific pattern. I'm going to go find this as my pattern. I'll go ahead and click on yes, and it's going to open up my pattern editor. So I'm just going to put this now on February 17th, 2015. And then I can make a description. I think that's pretty descriptive. You do not want to put in the date slashes. That'll basically give us an error. So I'm going to go ahead and take those out. And I can also compare this. And when I do a pattern quick test, it matches exactly because I just took it off of the price. And I can also, again, scroll back and see where similar patterns or what the price would look compared to this in the previous time, or in previous times. I'm pretty happy with this. So I'm going to set pattern match sensitivity actually to low, so it takes everything that kind of looks like that. And I'm going to make my default cloud focus 90 days. So go ahead and save Dow on 2/17/2015. I'm actually going to name it a Dow, so I can find it at the top of my list. I'm going to go ahead and click on Save, and there it is, Dow 26/2/2015. I'll go ahead and turn off the other patterns and run a scan on this particular price behavior that we have, and you notice we have a little bit of a drawing here. I'll rescan the select, and now it's going to show me every time that that's kind of a similar pattern has happened on the chart. And I can actually hover all patterns, and we'll see what the pattern looks like. In this particular case, it was a 98% match. It's very, very similar to what we have right now, just a few days ago. And I can kind of get a feel for how the price actually behaves after that pattern occurs. And then, of course, we have the statistical report down here that tells you, in this particular event, it's happened 35 times, and then we have all the statistical report. Importantly, what we have is we have a forecast cloud. So if I click on the forecast cloud, I can see what it's like. I can even come back and put that on the chart, and it'll forecast that out for me. So again, it's a very, very simple way for us to custom build sub-analysis. I use this a lot to kind of confirm the Dow trades that I have. I remember a situation, and I believe it was, we were testing this. Remember, it just came out to the public, but we were testing the new functionality, and it was right after where we had this serious downtrend back in, actually it was here in October. And so I knew that the pattern in the cloud that came back was actually very, very distinct and very straight up. It was a very good confirmation tool to use. Frank, can you hear me? Okay, cool, awesome. You guys look at the time real quick. Let's go ahead and take a look at Apple. So let's go ahead and open up a new it's back to the forecaster screen here. And what I'm going to do is I'm going to go ahead and click on Apple, AAPL. Go ahead and open up Apple and kind of take a look at some examples there. So I'm going to go ahead and start the forecaster. Probably you'll notice that the only pattern that I have it's recognizing right now is that 26/2015 Dow pattern. Now that actually happened a lot on the chart based on kind of our settings. And interesting, let's look at the cloud and then I'll run the suggested analysis. So looking at Apple, there's a question in the point. If I had statistical likelihood of a 65 to 70% that it's going to be 5% higher in 90 days, well, I could see the point of kind of maybe taking a play on that. So hopefully that's helpful for you. Let's go ahead and look at, though, I'm going to turn on back on the event recognizers, and this will give you an idea. Now, when I broadcast a screen, it actually takes a little bit longer to run the scans, but it does take a while. I'm going to, basically, it's doing a lot of math under the rescan Apple with all of the prices and all of the events driven. And then we'll kind of take a look to see which ones are the most indicative of future movements and kind of take a look at a couple of different ways to look at this on a chart. And you'll notice we're rate scanning all of the analytics, so it's going to take a few seconds. If you guys have some questions, we can go ahead and look at those right now. If you had questions before, there was a guy that said got a little frustrated because he didn't see answers to questions. But if you have questions, go ahead and ask them while we're running the mathematics. And you'll notice it's taking a few minutes to run through all of those. It's got a lot of math to crunch under the hood. I consume Jeopardy while it runs. I just shut the Dow chart down so it would only focus on doing the Apple charts. Okay, so now what it's done is it's actually taken the performance that we've got. Yes, Danny Cat had a question. Can you run this on the NASDAQ index? You can run it on anything you want. I was actually using the Dow. And to be specific, I was using the DIA, which is what I actually trade. So, but we were just running it on an index, so you can absolutely do it. You just put in the symbols. And if you it looks like we can throw up a little bit of a forecast cloud to do that. Now, Bollinger Bands had a highest profit potential, and we just had a break up on this. So we can look at that one for you on Apple. It'll be helpful for you. So right here again, what we're getting is we're getting the events that have happened. This is the boards. So, and the one that basically is ranked for the highest profit potential kind of looks like this in the cloud. And since it happened about October 22nd, we can actually kind of overlay that on the chart and see how it did. Apple outperformed this, but it kind of had the direction and the signal right. We can again come in here and look at the most accurate curve list, and that would actually be one of my hand-drawn Dow patterns followed by a Bollinger Band breakup. And right here, it kind of hit it right here. We can also look at the most recent event. Let's just look at some recent events to see what we've got. We just had a week high that's happened here and here and here and here and here. And so we have all of the statistics that we could look at. Going back into the forecast cloud, it kind of looks like this. So when we have a 52-week high, it generally tends to be between support and resistance. And then it'll generally kind of break up above that after about 90 days. It's very likely to ride us above 5% after that. So if I come back here to the price pattern, of course, we can kind of look at the way that would appear for Apple. And again, you've kind of got that pattern kind of drawn out on. That's basically, in a nutshell, kind of the idea. The idea here behind the forecaster, the point is what is the statistical likelihood that a 52-week high or a triple top or a triple bottom is going to affect price? What usually happens after you have that breakup or that breakdown? David, I'm sorry you don't have I don't know what to say. I probably won't help you if I tell you how to fix it either. Donna asked another question, can this tool be used on? Absolutely, Donna. We cover, for those of you that may be international, we have a lot of international clients. For those of you that might be interested in futures and Forex and all that kind of stuff, we actually cover about 182 exchanges globally. So you can actually apply to just about any you want. If we don't really offer the data for it, you probably shouldn't be trading it. I've only come across one exchange, which was the Jamaican stock exchange that we didn't cover through Reuters. With Apple, we just had a 52-week high, Frank, and what it's saying is statistically likely that it's going to stay pretty much at the same price of March. After that, the statistics aren't going to be as good because it gets a little bit lighter here. But it's going to probably, what you're going to see is probably about July a little bit of an uptick in price. That's what this is saying. And and generally the target for that in the red area here in July would be about 135-ish. Breaking up about the 140 zone, but less probably. Right here where it kind of gets lighter pink, you're looking at a 60 to 65% probability. I hope that helped. It does. It has a lot of candlestick signals that are broken into this. So just to kind of show you on the list, we've got quite a few different candle patterns that have been written, and they all start with candlesticks. With the candlesticks, I like to leave those on a shorter time frame because traditionally with the candlestick patterns, you're looking at they're a 5 or 7 day pattern. If you combine those with the trend, you can extend those out a little bit. But if you're just looking at a bullish engulfing, I like to keep those on a shorter 30-day forecast. It is not tied with earnings yet, but that probably is coming. We're going to redesign and make it so that we can access a lot of fundamental data. So that's on our list for vaporware. Hopefully we'll redesign all the formula language and tie formula into this in the next version. So it's definitely something we have access to the data for. Now I have 5 minutes left, so let's go ahead and kind of basically, again, just to kind of go back to this slideshow a little bit, there's a lot of stuff that we really didn't cover. You know, there's a lot of stuff that's available. It's a huge toolkit. I like to show the forecaster because it's something you haven't seen before. Whereas a lot of times back in the past we created the idea of scanning the whole market to find a signal, and then that's everywhere now. Or we made up system testing back in the 80s, and that's everything now. This is a little bit unique, and it's part of the tool sets that are available in Metastock. I use the forecaster for myself personally. It's a common tool. So every time I actually go in to buy puts or calls, I'm actually looking at a part of Metastock called Sector Stat to get those puts and calls, which I have a whole nother class on that. But it's a very, very cool product inside of Metastock that looks at some McClellan stuff to kind of give you unbiased sell signals. And then I'll confirm and kind of set my price targets around the forecaster. So it is just one of the tools that are available in Metastock. And a very cool tool, not to undermine it, very, very cutting-edge stuff. The people that are using it are loving it. Again,
hey Jeffrey, I don't mean to interrupt you, but we are looking at it actually.
Okay, well let's go ahead and cut to the chase here. Again, we've been rated 24 years in a row. I did promise to give you a free trial. So the Metastock end of day is $59 a month. It includes data for whatever you're interested in, whether that's stocks or futures or Forex. You can do like Europe, Middle East and Africa, North and South America. You'll pay about $250 a month, and it's a great value at that price. You might want to talk to a sales guy about kind of ways you can purchase the program and bring that monthly cost down, but that's what you'll pay on our lease. And the reason I kind of talk a little bit about the lease is because you can get a free audit. So hopefully this was interesting to you. If you want, you can go to metastock.com/traders-summit-T, and they will answer. You can sign up for a free trial there. If you have questions, you can email me at jeffrey.gibby@metastock.com, or you can email one of our sales guys at sales@metastock.com. And then the phone number to ring in on is 800-252-9901, and it's 11:45. How's that read? I shut it down real quick for you.